Good morning. Welcome to Admiral Markets. Thank you for joining in this live webinar where we take a look together at strategy, to be precise, strategies in the Forex market. And we'll start in just a second to take a look at, for instance, the euro dollar and other currency pairs. But first of all, we have these two disclaimers to inform you of. The first one is explaining the fact that the webinar is intended for a global audience. It may not be suitable for everyone. Please find out more information on that and conditions and details at admiralmarketsglobal.com. Select your country of residence and then contact an appropriate entity. Also, trading for exchange and other financial markets is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Good. First of all, I wanted to ask you if perhaps the sound has some echo. Just want to check, or is it as good as normal? Do you hear some echo in the background, perhaps? Okay, let me try to fix that just very quickly. I'll be back in 10 seconds. Alrighty, I'm back. I hope that it's a bit better now with the echo. Alrighty, let's continue. I wanted to say that we'll be talking about strategy. We'll take a look at the strategy that was discussed last week on the end of May still, which was the 27th, and but also do some general analysis, take a look at the setups that I was looking at yesterday as well. So we'll probably start with that and then move on to the strategy. So if you joined specifically to look at the strategy, then I just ask you for a bit of patience, perhaps max 30 minutes, but probably within 15-30 minutes, and we'll look at that. All right. In the meantime, let's start off with looking at the economic calendar. And we had Aussie interest rate this week. Of course, it stayed the same. Today, I don't think we have interest rates. I think it's tomorrow. No, we do have the euro. Sorry. Tomorrow is the pound interest rate. Euro used to be on Thursday as well. Today it's on Wednesday. I don't know why. And Friday we have NFP. Plus we have a news potential around the Greek ECB IMF deal, perhaps that could be lingering or is a negotiation. We have PMI services, which could be a big one on the pound, and ADP. A lot of things happening this week. Alrighty. Let's take a look at the euro dollar first of all. There we go. Euro dollar, this is a template with 4 moving averages, and basically yesterday we got the big break to the upside, and I did give a slight advantage from a wave perspective for upside. Yesterday we had a Fibonacci and wave webinar at the same time, same place. And from that perspective, I thought there was more potential to the upside than to the downside. And an hourly chart, I was saying it could be explained by the fact that this is a wave 1, 2, wave 1, 2, and then we needed an impulse, a strong momentum to basically confirm the fact that that is a wave 3 to explain this turnaround. And we did get that push, we did get the momentum, and it could be explained by a wave 3. I think it looks like a wave 3 to me and not a wave C. That has to do with the fact that the distance it traveled. Now, let's put a fib to show you what I mean. If we put a fib on the wave 1, 2 right here, and this is one of them, then you can see we went to the -1272 target, which is a pretty decent distance it traveled. If you look at the number of pips that wave 1 was here at 137, then wave 3 traveled 305. So definitely the third wave here is a lot bigger than the first wave. If they would be equal to each other, if the third wave would have gone only to about 110.50 perhaps, right, then they're equal in length and it would have stayed more of a corrective nature like this, would have stayed in that channel like that. Then it would not have looked as impulsive. Now we traveled enough distance for me to say, okay, that is a good momentum that will probably get followed through. The difference here is that if it didn't get enough momentum, then it's still more of a corrective form and it's probably more of a resistance point. With this momentum behind us, I think that this is more looking like a triangle or a flag of which after which I would expect a follow through to the upside. In other words, this is probably wave 3, 4, wave 5. So just to finish yesterday's analysis about the setup that I mentioned yesterday, there were two setups I mentioned yesterday. So I'll discuss the trade management of that, and then we can talk about today. One entry was based on the fact of the break of this 4-hour fractal that I said most fractals breaks on the 4-hour chart are pretty good. This was one of them, and this trade is still in play. I personally have moved the trail stop loss to 111.13, just below this little bit of a candle here, or the 1-hour bottom here, locking in about 110-ish or so pips. The risk was about 125, so it's almost a 1-to-1 locked in. And I have a target now at 120.20, about 45 pips from now, which would lock in about 220, which is just a bit less than 2-to-1. That is what my current trade setup is. Trail stop loss and a TP here. So whatever happens, there's profit. It depends how much profit, hopefully more profit than less profit. Will it go up to 120.20? No idea, obviously, but it's a target that I think is reasonably close. It's only 45 pips from now. I therefore think it's a decent chance, probability that it will get there. I said yesterday that I would basically determine today or soon what my TP was. It was open when I took the trade because I wanted to see how far this momentum would push. I didn't want to have a TP and then cut my profits short and then see it go through that. Now that I know how far it went, I can put a fib from here to here and say, okay, I'm aiming for the minus 272 target. But in this case, I actually went far below that. As you can see, the minus 272 target is 112.75. I went a lot lower than that. Now, part of that has to do with the fact that 112.50 is a resistance spot. Part of that has to do with the fact that 112.25 is in today's H3 on the Camarilla. So I went for a very, I think, conservative target. But if you from a more aggressive point of view, 112.75 is possible. Even, who knows, even further. But that, of course, the higher that a trader aims, the higher chance that it could be missed, right? Like the minus 618. So let's see if it gets there. But these are my ideas and reasoning behind that TP and trail stop loss. If it would have pushed higher like this, obviously you can see the advantage of leaving the TP open for the moment, because then I could have aimed for this or this. So I leave my options open like that. But typically, if you look at the 1-hour chart, and this is a wave 4, then the wave 5 will probably do something like this. Then we'll get a retracement again, and we'll probably get one more break. This is what I'm expecting. So I do expect a higher target. But one of the reasons why I went, also another reason why I went for a more conservative target and also a tighter trail, is because of news events this week. We have euro interest rate, we have pound interest rate, we have NFP, we have ADP, etc. So I don't see much reason to give a lot of leave the trade open for longer. If you see what I mean. I'd rather exit sooner than later from that point of view. Lock in the profit and put it in the account. So if it were not a week full of news events, then honestly, I probably would not do the same plan. If it were not a week with trading news, I would probably not move this trail still. I would still leave it actually, maybe still at the original spot, because I want to see if I would, in this case, with such a momentum, writing it, I would trail stop fractals rather for the moment. At least one fractal, at least one higher low, I would like to see, and then I might think about trail stopping candles. If it were not the news week, I might be more aggressive and aim for, let's see, perhaps even all the way up at 115. But because of the news event, I rather do this and this. All right. One more thing I wanted to say about this move up is the momentum was strong here, and typically, I mean, this is of course a statistic. It's not something that always has to occur, but on average, when you have a move like this, what you typically see is something like this. You got a strong move, you get a light retracement, kind of a corrective retracement. You get a continuation, you get a light correction, you get a continuation, and then perhaps you get something like that, and eventually you might get the break like this. My point is that you'll get like at least one, but typically 2 or 3 breaks of the top before the 15-minute divergence has an impact and you get maybe a bigger retracement. So that's why, from that point of view, I am expecting 1, 2, 3 breaks of this top, depending on the news. In this case, a bit more vulnerable to the news. When you get a big momentum spike up, the most conservative target you can aim for is the top. Then you would already be out of that trade. The most aggressive target could be to not have a TP actually, and just wait for the breaks of the top. Let this top break, let another top break, and then place a TP. And then you're basically adjusting your TP to the market kind of movement of momentum and the oscillator. By doing that, you're not cutting your profit short, at least. And that's useful because if anything, we traders tend to cut profits short, but let losses, become bigger. This is one method that allows you to be more flexible on the TP and kind of optimize it a bit better, right? I hope that's clear. Now, let's think contrarian for the moment, or at least contrarian to what I'm thinking about now. And Modra talked about through Twitter, and if you want to follow me, you can do that by going to @ and just my name, which is Chris, and then a very perhaps complicated surname, Swarsek, where you can find the occasional updates. I'll try to do more my best. I'm not sending many tweets, but you can find a few that I send on this address. But Modra sent me an interesting message about the 61.8 fib. One more reason, perhaps, to be careful with the 112.20, where I have the target. Now, he had the fib a bit lower at 112.07, so I'm not sure where the difference is from. I have it at 112.19, but luckily my TP is at that level. So if it does respect the 61.8 fib of the bearish fib, I would also still be out of that trade. Choose closest resistance. In that case, you mean this, not this one, because then it's 886 fib. You mean the top here? Got it. Yes, this is a resistance spot. Indeed, at 112.07. True. It's a daily fractal. So that could be a level to reckon with, indeed. Plus, perhaps if you use the fib on the entire swing, it is also close to 61.8. Good point. So from that point of view, there's always, of course, the chance that this is a zigzag. If we put a fib on the entire upside like that, we went to the minus 1,000. Typically, zigzags end at the minus 61.8, but a minus 1,000 is certainly within a limit, within a reasonable expectation of a zigzag too. From this perspective, I know it sounds funny, but from this perspective, yes, there is a potential. It's still a zigzag, and who knows, the zigzag is over and we go down again. So from that point of view, that's why I feel comfortable with the trail stop here, locking in at least almost 1-to-1, and for the chance that this is just actually a turnaround. Typically, this momentum does get followed through, but there are definitely cases. I don't know how many, but depending on the structure of the market, that you don't get the follow through, you don't get the wave 4, but this is an ABC. And in that case, a resistance point like that could be the thing to stop it, and it could follow like this. All right, then this was a good trade to the upside, and it's over. All right, so it seems to get some bearish price action, but at the moment, but it could still find a bounce here at 111.50. Let's see. That will be the alternative. All right, so we'll discuss that, what kind of implications it has for today in just a second. I just wanted to tell you one more thing. That was the first trade setup that was mentioned yesterday. The other one was this one. I said, wait for this candle to close bullish. It did. Put a fib on the candle itself and look for the 38 or 50 fib. Did anyone take any euro dollar long, in fact, yesterday, by any chance, just out of curiosity? Great. Are you in that trade, or did you close the trade? And if you closed it, how many pips did you were able to book? Probably profit, hopefully. 30 pips, great. Nice. Good. 3 traders that took it. 50 pips for Beverly, the 4th. Great job. We'll just took the pound dollar. Okay. But plus 30. Okay. No problem. Good job, everyone. So this was the second plan I mentioned. For those that wanted a tighter stop loss, a 38.2 fib at 109.60 with a stop loss at 109.13 was about 50 pips. I wrote 40 in my tweet. Okay, made a calculation mistake. It was 50 pip risk. Anywhere between 40 and 50, depending on the fib. And then aiming for the minus 61.8 or minus 61.8. Well, in any case, you can see any of these fibs. This would have given plus 75. This would have given plus 150. So there was a lot of potential there on the euro dollar when using the fib on the candle. And this, I know sometimes it maybe is difficult to imagine when I say it. That's why I want to show it to you on the chart. This is what I intended to show you yesterday, what I was thinking about trading. Right? It's easier now to show it because the candle has printed and we can put a fib on the candle. And the hook back to the fib and boom, to the upside gave good potential for upside. So I myself have closed this trade I took with you. I think it was for 100 something, 140 or something like that. My real account trade is still open, and I have a stop loss here and a TP here. Personally, I didn't take on the real account this second trade. If I would have, then I would have closed it already, to be honest. Alrighty. So I think I really exhausted everything I wanted to say about this euro dollar. Sorry, maybe for if you're not interested in all the details, but I think that's it that I wanted to say. This euro dollar ended up with a big candle, 300 pip candle. So maybe now finally we can talk about today. Indeed. Today is not, I would say, as straightforward as yesterday. Yesterday I found particularly well set up in the sense that there was a good potential for a break like this or a break like that, and both seems like good setups to me. Today, is a bit different story. I do think that there could be some trades today, but the thing is that if we break this resistance spot here, taking a long above it is, I think, taking a long in a high risk area, an area where you might have struggles with continuing a lot. So taking longs there seems not ideal. Now, definitely today, and depending on the news event, but I would still, because of yesterday's candle, definitely consider a bullish environment. Because today, we only have yesterday's candle, and it was very bullish. Now, from that point of view, I, throughout the day, will remain bullish from a trend perspective. But where to take a long is another story, because above this top, I wouldn't be too big of a fan. So perhaps on a retracement, it could be a different matter. From that point of view, a retracement to any of these fibs, right, could be a bounce potential. Now, as you can see, my trail stop loss of yesterday is only going to be will survive only if price bounces off the 23.6 fib at 111.25. Otherwise, I'm going to be taken out, but then I could still try to re-enter at a lower at the 38.2 or 50 fib. Those would be potentials there. I would not take market orders, or I would not take pending orders, just in case that this is an ABC, and I want to see how price responds here. Does it make a bull flag like this, for instance, like it's doing now on the hourly chart? Then the 38.2 fib could be interesting. But if it starts to have too much momentum to the downside, like this, I would not look for any longs anymore. In fact, I might even start to look for shorts if we get a bear flag. So basically, I want to see how price responds right here, how it reacts, and how it reacts to these fibs before taking a trade. So from that point of view, it's not as straightforward, in my opinion, as yesterday. Now, let's see, if there's a scenario where price breaks the top here, and on a smaller time frame, let's zoom into the 50-minute chart. We bounce and break like this, and we build some, maybe even the 5-minute chart. And we retrace like this in a bull flag, and you see this spike up on the AO, and you see this back to the zero line. Then I think there could be an intraday long as a bounce off that support. All right, if we get a good momentum to the upside and we get a shallow kind of retracement, and this goes back to the zero line, something like this, for instance, here or here. Here we had an impulse back to the zero line, and we got the follow through. Impulse back to the zero line, follow through. Now this one also had some follow through, but it was already the end of the day. Something like that could be one way of trading the break of the top, but I wouldn't trade the break of the top just with a pending order, because of the risk that is involved. Because when we break the top, we don't know what kind of reaction there could be. There could be a false break, and it could fly down, and then I'm not interested in it long. If it breaks and I see a correction that is looking weak, then I'm more interested in longs. So I want to see the reaction to the break. I want to see how price responds when it moves down to the fib, or how fast it moves. This type of information is important for me to gauge whether this is as serious as a bullish environment or it's just an ABC correction. I hope that makes sense. I mean, that's what I'm looking at the moment. and I don't want to, I don't want to become a predictive kind of trader that says, okay, this is definitely bullish. I'm not want to make that kind of statement. I just want to see how price responds now, and adjust that plan accordingly. All right, that was a bit long, but let's see. Some questions. Why did this move happen? Well, I guess it depends how you view trading. Maybe there was some news yesterday that pushed it. I have no idea. If you look at news often, I'm sure there was probably some news that gave cause for the euro dollar to go up. In my opinion, how I look at the charts, I think that yesterday, maybe some rumors or something like that. Yesterday there was more space, profit potential to the upside. I think than to the downside, from how I look at it from a wave perspective. And once the momentum started to go up, I guess it just kind of snowballed as more traders joined that direction when the bullish kind of momentum became more established. But it really depends how you look at trading and what you believe makes the movements and etc. Okay, Wei is asking about the difference between pound and euro dollar uptrend. We'll take a look at the pound in a second. How do you know which fib level to enter? Well, there are various things we can use when this is if this is a wave 4, which we're not sure now at the moment, but if it is, you would typically see one of these 3 fibs, and not deeper, or you shouldn't see it. If you're at the beginning of a trend, you'll actually see more deeper fibs. That's one thing. Otherwise, there's actually no thinking. Is there any other way to determine that? Perhaps the oscillator indeed could give you an idea about it. Or wait, one other technique is by placing a fib on the correction. That's another way of doing it. Let's see here. Here you have a correction, right? Let's go there. So by placing a fib on the correction, you can expect a turnaround at the targets as well. That's another way of doing that, which lines up often with the retracement. So you get Fibonacci confluence, basically, between various Fibonacci tools. That's another way of having an idea about which fibs are more likely. And the third kind of non-practical answer, perhaps, but is we don't know. And we really have to look at it from fib to fib. When it approaches the 38.2 fib, look at lower time frames and see if we get a price action reaction to it. If it then breaks lower, wait for the 50. Wait for the 61.8 and see which one gets the reaction, a good reaction. And good, I mean, don't zoom in too low, because if you're looking at the 4-hour chart, don't zoom into the 5-minute chart because you always see a reaction, but zoom into the hourly or something like that. Zoom in one time frame lower, because if you zoom in too much, you always see some reaction on a 5-minute chart. If you zoom in 2, 3, 4 time frames lower, you always see some reaction, but it's not the reaction you're looking for, because you're looking probably for a bigger bounce. Hopefully that makes sense. All right. Okay, I think that's it. So let's take a look at the pound dollar now. So the pound broke the channel here. Oh, I actually had it like this. The channel was broken, and yesterday offered entries potentially here at this fractal already. Why this one? Because this is the one touching the trend line, not this one. Plus, this is more like a pullback continuation, whereas this is already showing turn. Anyhow, the 4-hour fractal is here, so that could have been an entry, or I said if it breaks the 4-hour fractal, wait for a pullback to the 50 or 61.8. I think that's still valid. I think we could still see that zigzag up to the minus 61.8 at 155. So from that point of view, when looking at the pound dollar, here too more bullish, but not right now. But from lower, probably any of these fibs, 50, 61.8, 78.6, 886 in fact. Deeper fibs in this case, because I think that there is a chance that this could be a zigzag. There is a slight chance that this could be a 1, 2, 3, 4 as well, 5. In that case, but the pound dollar typically retraces deeper, but in that case, if we do get a bounce on shallow fibs, I would rather wait for the intraday break above the top, probably to the target. If it's a deeper fib, then it will be easier to trade at a market order right around that level. 1 hour reaction or even a 30-minute, 50-minute reaction could be good enough. As long as, I want to avoid buying it when it's just like falling like this, then I'll skip it. If it doesn't show like that strong momentum, or if it shows decent momentum, but then it does show some reaction to it, that's okay. So I still think that the zigzag here is most likely scenario. Just after a fresh break of this fractal, on average, there should be at least one more follow through. After that, we'll see. But that's my opinion on this pound dollar. If a trader is looking for a pending order, I would personally use a pending order at the 50 fib. It could go deeper, but it might stop at the 50, and in that case, I think the 50 is a good, let's say, midway point, or like not too aggressive and not too conservative entry potential. 153, yeah, there is this bottom and this top, perhaps indeed. But it depends on which time frame you look at. This is tops as well on a 1 hour chart. I mean, if you like the 38.2 fib, then I don't think there's anything wrong with that either. By the way, this just that depends on how much you like to trade and are willing to sacrifice perhaps a few pips to have a higher chance of entry. That balance is indeed always personal, and indeed nothing wrong with the 153 as long as the stop loss is okay and below this bottom, or if that's too loose, then at the very minimum below the 78.6, I would say. Alrighty. Let's see, Caitlin, I'm not sure. There is a live trading room webinar. That was yesterday. Today's webinar topic is strategy. But maybe, so I'm not sure if that is what you mean or not. For me, well, that's yesterday's webinar then. That's this webinar that we're holding now, but today is a different topic. Today is strategy, but I'm also talking about analysis now. All right. But if you have follow-up questions, just send me an email, okay? We can discuss it maybe better through email if you have any follow-up questions. No, not about, not yet at least. It's maybe an interesting idea, but that doesn't exist at the moment. Alrighty, so this could also be a wave 1, 2, 3, 4, 5, but I'm not too fan of trading at 23.6, so I'd rather wait for the breakout on lower time frames. By using a 5-minute chart, looking for a strong AO push, and then looking for the AO to go back to the zero line. Alright, let me take a look now at the strategy. After I just look at the EJ very quickly. I took a long on the EJ and the Aussie and a short on the pound odd very quickly, not to bore everyone who missed yesterday's webinar, but I took a long based on this candle and grabbed, it was 65 pips or so, but in retrospect, it could have been a lot more. In fact, it pushed up to almost 139. I didn't like this point, but when I saw this candle and the euro dollar push, that was enough for me to take it. The exit was certainly not optimal because it really went for 200 plus. The whole move was 270, and I kind of caught a bit on the lower side of that, but still okay. That was a nice push, though. I actually got a bit. I had a trail stop loss, but didn't respect it and just closed the trade, and then it still started to push up. So you can see that that was not smart from a trading psychology point, not to follow my plan, but okay, those things can happen. But still 65. Then the pound odd, I talked about the break, pullback, go yesterday. Took the trade somewhere in here for plus 52, but that also went a lot more. I have to remember that these pound odds tend to fly a bit more. 250 it went. And the last trade that I took yesterday was the Aussie, and then we'll take a look at the strategy. And there I said looking for a zigzag to the upside. I didn't take the 38.2 fib, but took the breakout somewhere in here and managed to take about 52, if I remember, or 48, something like that. And also this one went up for a lot more, but still managed to catch a nice slice between the fib 38.2 and the target. All right, now regarding today's strategy. Last week we talked about. Oh, sorry. Wait, Jen had a question. Bjorn is saying very low volume. I think it could turn up, and then Jen. One quick question on the pound. I don't think the cable will retrace that deep. It could. Doesn't seem very likely at the moment, though. But at the very, I think the best place is still here as a stop loss. But if a trader wants to tighten the stop loss, then the closest I think a trader could get is below this 78.6. Otherwise it's really putting the stop loss, I think, in harm's way. Unless you're in nice profit and you want to be out of all risk, then you could tighten it up extremely tight below here. But if a trader took a 4-hour trade breakout somewhere here or here with a decent wide stop loss, then I think moving that stop loss to here is a bit too early, in my opinion. All right. Strategy finally. So to put the strategy on the chart, this is a free strategy which you can get without any problems from me. Just send me an email and I will send that to you. You have to go to a 1-minute chart, put on the script that then I would send to you. Click on 2 here. Then click on OK. All right, then you want to click on File and Open Offline. Oh, I wanted to send Caitlin my email, but I sent it to someone else by accident. Then you look for your dollar in this list. What we're looking for is something I cannot find. It's euro odd, that's why. Sorry, your dollar. We need to find your dollar and look for M2. M2. Click on open. Then apply the template. All right, there it is. These are range bars. Yeah. So what we're looking for is basically price to be in a trend. The MACD alert to go back to, I guess, the middle line, but specifically we want to see this line cross into and become green again in an uptrend or red in a downtrend. All right, but we do need a trend. In this case, we do have it. We had a momentum here. As we can see, obviously yesterday. Wait, this is only yesterday evening. Hang on. Oh, okay. Right now, last push was still momentum to the upside. Somehow, there seems to be something that doesn't add up here. Let me try again. First, we go to the 1 minute. Put on the template, make the bar range 2. All right. Open offline, go to your dollar, click on M2, open, and then there. Hopefully, yeah, this makes more sense. Something was not totally right because okay, too many. I think the range bars were too high. This makes more sense because we see a lot more information since yesterday. Let me show you maybe an example of yesterday to illustrate what we would be looking for. Yesterday, basically, we had an uptrend. Now, the existence of a trend, basically with the moving averages, indeed. Now, here in this case, for instance, you have the blue one, which is a short-term one, and it's in this case, the strategy is using 40 and 120. The 40 is above the 120 here, and the 40 is below the 120 here, and the 40 is above the 120 here. But this is not a trend. This is something that we would have to visually see and understand. Sometimes we'll make, obviously it's not going to be perfect. There's going to be moments that this goes wrong. But when it's flat like this and it's kind of like intertwining with each other, it's not a trend, even if one is above the other. What we're looking for to establish a trend is not only one above the other, but some gap here between those moving averages. So preferably something like this, for instance, could have been one here when it turned green, although this retracement was already pretty deep, so not as easy. But we did have a break, perhaps of the no. Yeah, now I'm confused. We had a break of no, we didn't actually. Okay. So this one I would not consider a trending setup. All right. It did work out, but when it turned green here, but that wasn't necessarily a trend. This is a better one because here you got a growing moving average gap, and when we turn, price is bouncing off the highest one instead of retracing so deep. So this one is a good entry about here after the turn has been made. Typically, a stop loss tends to be between 10 and 15, seems to be ideal. So if the entry is around 44, the bottom is at 37. So, 10, 40, so something like 44, 34, between 29 and 34 would be okay, somewhere around here. And the trade goes up for, well, typically 25 pips is already very nice. If you get more, it's definitely already going into a kind of big momentum. This went up after that entry point, roughly 45, which is a lot. Now the exits is really flexible. One, you can trail stop fractals. We can even have fractals here. Let me do that. In that case, the exit would have been somewhere in here, somewhere around 77, perhaps for 33 pips. Another way would be to put a fib on swing high, swing low, and say, okay, I exit the minus 16 or minus 1000, or I leave it open and wait for the next fib target here. I let this one ride out and wait for the next target to be hit. So you're looking anywhere from 25 to max 45 in this setup. All right, so the next one would have been somewhere around here because it's still an uptrend, but that one failed. This one did not work out because we got the turn here and we broke through this kind of small consolidation. So that would have been whatever minus 10, minus 15 loss. This is not trending anymore. One can consider this to be a setup right here, I would say. Still, this is an uptrend. Moved up for some 19 pips. Even here, that could have been max break even probably. This one is not a trending situation anymore. This is right here. And went up for a rally of 45. This one is potentially here. Let me see if that could have been a loss. Perhaps yes, depends how tight you have the stop loss. In this case, a 15 pip stop loss would have held, a 10 not. Otherwise, a re-entry would have been possible here. And about 30 pips. When the lines start really seriously coming together and converging, it's not a trend anymore. But a potential entry could have still been valid here. That did not do well. That would have been a loss, or maybe probably a loss. Another one was here. That did very well, in fact. But this was actually not a trending situation already. Sorry, skip that. But if you do trade breakouts, then obviously you do see a very established kind of zone here. So from a breakout point of view, but that's a different strategy, though. But if you're looking for your dollar continuation after it had already risen to 110.50, it would be one way of catching a pretty good upside. But this is a breakout, not a trending situation. So that's the idea. After that, it's already going into the end of London. That's the end of London. Yes, Caitlin, this is the one from Elite Currency, indeed. This is a free strategy from Elite Currency, and you can also send an email to info@elitecurrency, and we'll send the same strategy. If the chart freezes, the best is, I know it might be annoying, but the best is to close it at the end of the day after you've used the template, and to reopen a new one the next day. Maybe try that if you don't mind opening it the next day. That could maybe help. It's why range bars and now Renko. These are range bars, I think. I don't think these are Renkos. as far as I know. I'm not that expert. I use candlesticks myself normally, but is there a difference? There is a difference. I wouldn't know by heart, to be honest. Does anyone know? Let's see. Jen is asking your dollar. Well, yes, it could fade away its gains. I don't think it's the most likely scenario. Indeed, considering yesterday's bullish candle and the fact that it was a 300 pip candle. But it could be kind of an unsure day because of news. I don't think it will erase all its gains, but it could close bearish, if you know what I mean. We have a 300 pip candle. So I don't think we'll see a 400 pip negative candle, but what we could have is yesterday 300 pip bearish, but today could be like, I don't know, a 75 pip bearish candle with a bit wick here and a bit wick here, for instance. That could happen. Depending on the exact outlook of today's candle, it could be an inside day, or it could look more like a harami and more bearish. Or if it, obviously, there's also just a chance that this yesterday was negative, positive, we get a small retracement, and we have again a bullish candle. That's kind of the balance today. The cable, I think, will make a zigzag. Typically, if you have such a... The difference with the euro dollar is that it has made 3 waves, so it could be a zigzag, although I don't think it's the most likely. The pound dollar hasn't made 3 moves, so that's why I think, well, okay, it has here. But from a 4-hour perspective, this is 1 move. So I would expect on a 4-hour chart at least this. Personally, I think that's a good chance. Buying the break of this fractal is possible. Still okay, I think, but yeah, not as nice as I think as this first, as a retracement buy personally, or the first fractal break here, or even the 4-hour fractal break here. But it could be an add-on position. If someone is in a long here, I wouldn't personally add on that close to the current price personally. I think that's a bit too close to each other. I don't mind add-ons, but let's say if I take a short here, well, typically I like to be up, if when swing trading, to be up and away, I don't know, definitely more than 100, preferably more than 150 or even 200 difference between the entries. Oh, you're not in a trade. Okay. Yeah, in that case, well, we had a fractal break here. This fractal had a high of 153.04. So typically, I would be looking for an entry at 153 or 153.25 upon this fractal break. That still remains valid as a level. Until we get a new fractal here, that particular level is still valid. There is a chance we might get even lower to 152.75. In that case, it would even be a discount. The entry that I would take upon this fractal break is 153.25. $24. 153.24. But with today's information, we know it could go to 153 or 152.75 too, which would provide even a better entry level than the fractal break here. If it doesn't retrace that deep, then I would look for shorter time frames to catch this piece here. Or, yeah. Caitlin, I never used a Martingale strategy. I know that some are absolutely against it. Some are more indeed open with the idea. I personally don't like the idea. I don't say it. I don't necessarily say that it must be wrong or something like that. I don't know enough about it. I never did any calculations to prove that it's horrible or something like that. But I just don't do it myself. I just rather, I don't want to get into emotional seesaw where I double my risk, and prefer to keep emotions under control. And I can do that the best if I risk the same or almost the same. So that's why. Wei says Martingale needs to be risk focused against trends and generally volatility. Yeah, maybe if you take lower levels of risk, it will be easier to vary the risk quicker, right? If you take, let's say, 0.2% risk, then it's easier to say, okay, I'll take 0.3 on the next one or 0.4 on the next one, and I'll take 0.6 on the one after that if I lose, and I might even go to 0.8. That could be maybe a bit easier, but Wei also adds that it's almost impossible psychologically to trade that manually. Plus, you need a lot of capital. Indeed. Good points from Wei. Beverly, Martingale, as far as I know, is increasing the risk after you lose. Some say even double the risk, I think. Truly, I don't know a lot about it. It's something that never really appealed to me. Caitlin adds that that maybe for unskilled traders, Martingale seems appealing. Wei is adding, by the way, that optimal is 1.5 to 1.6 times of previous risk. If someone does trade it perhaps automatically or even manually, that Wei is adding that could be a good level to think about or research. Let's see. What target for the cable? 155, I think. This minus 61.8, I think could be a good one. We have engulfing twins, which is not nothing, so I would definitely expect a follow through of that. At least for today or tomorrow. If it doesn't happen within the next 2 days, then perhaps something else is going on, and you might get a small push like that and a failure. But for the moment, this is weighing heavily on our analysis at the moment, and would expect follow through to at least 155, which is the 61.8 fib plus the target. That is, for the moment, I would say the main target in vision. Could go higher than that, but that would be the conservative target at the moment, I would say. Alrighty, so let's take a look at the strategy. Does anyone have a particular currency pair in mind that we can look at for the strategy? These are Heiken Nashi bars, by the way, and you can see that here this is a 21, I think, or 34 EMA, and you can see a push above it, then a push below it, and here was the push above it, and that's the second push. This is push 1, this is push 2. Aussie, great. Take a look at the Aussie. So I open a new odd USD just in case, so that it's nothing is disturbing that template. Let's see if I can find the odd USD first of all, though. Then I go to the 1 minute chart. Then I open up the navigator. I go to constant range bars. I drag it onto the chart. I change the bar range to 2. Once again, I click on OK. I click on File and then Open Offline. Then I go to the odd USD. Click on M2 and I click on Open. Then I apply the template. And we can look if there is some kind of trend at the moment, and I don't think so. So basically, with this strategy, it's a question of scanning the market, seeing where there's a trend. At the moment, probably considering the time of day at the moment, there won't be that much of a trend going on. I would not consider this a trend as yet, but there is a slight growing gap here. From that point of view, this is red. It could be a very risky short, but I don't think it qualifies as yet. It's too flat at the moment. M2 is a range bar 2, basically. 2 range. It's a special script at the moment that we're using. It's a script that it's not a time frame. So it's not minute, 2 minutes or something like that. Now, obviously, this is kind of the way to use the strategy, but from a rules-based perspective. But if someone uses this template, first does analysis, and then uses this template, other entries could be possible too. Let's say, for whatever reason, yesterday we're looking for a long and we're looking for a breakout. Well, then we can use these bars to have a different view about entering here, even though the moving averages are not aligned. This would not be part of the strategy of this particular template, but the template is then used as an entry method, right? And based upon higher time frame analysis. So this template could help a bit with seeing maybe entries that are not visible on time frame candles because of how they are built and how they print. So it could be used for 2 ways. One is the very strategy focused way. Second is more the analysis plus then using this as an entry. Yesterday I was actually thinking about the Aussie, right? At the moment we don't have a trade, I think, personally, but yesterday I was thinking about the 38.2 fib or a retracement to a fib, right? And then a bounce off that. Now I didn't use this template for the entry, but let's take a look how it would have looked with this. I did take the entry, but I didn't take it based on this. Let's take a look at how an entry could have looked at. If we're looking for a long, if I'm looking for a long yesterday, and it does bounce here with double bottom at 382, we got to move up. Then this could have been one long here. That would have been a loss, actually. Another long, perhaps here, but that's not optimal because it retraced pretty deep, but could have been possible. And otherwise, the next long was only all the way here. Let's continue. This one not so much because the moving averages were not that trendy. So, if you follow these strategies rigorously, then you on the Aussie, it would have not given many trades. It would have been how many? Three, I think we said. No, was it? There were actually more opportunities. There seemed to be more opportunities, but if you really look closely, not one. Yes, one, two, I guess. But there were some good moves and breakouts that were not part of it. Alrighty, let's see. Ejecting from 38.2 level. Okay, maybe is that a bearish fib, Mondris? Okay, got it. Yeah, there are definitely going to be levels to the upside that will be strong resistance. I didn't put a fib on the opposite side, but apparently it's close to a 38.2 or at a 38.2 fib. Beverly, this should be able to be applied on either platform. Indeed, that shouldn't be a problem. As far as I don't think so. Already. Great. Let me think what could be a good. Let me quickly take a look at the weak strong indicator. What could be a good? Oh, it's the wrong euro dollar. Here. That's it. So euro strong, dollar weak. That's what this indicator is saying. Let me refresh it. Let me add the indicator again. But everything is flat. You see that? And they're actually kind of going back to the mean, to the zero. If anything, Aussie is on the highest and the dollar is the lowest. So yeah, that would have made the most sense. But there is no momentum at the moment. The market is too flat, I think, for this strategy, unfortunately, at this point in time, really. On the lower time frames, it doesn't look. Well, this is a 30-minute chart, so let me zoom to the 5-minute actually. Dollar is picking up a bit. Euro is falling. I don't know. What is this one? Pound, maybe? Maybe euro pound. Pound cat, pound yen. Let me take a look at those. We do have a pound news, unfortunately, but the short right in here doesn't look that attractive. It has been moving up a lot, so that does not seem appealing to me. How about the pound yen or pound cat, perhaps? Looks better. So let me take a look at this pound yen from the strategy point of view. This looks like it's breaking out. So Alrighty, let's go to take a look at this. Be careful of the news event though. Go to the 1 minute chart. I guess this will be the last one from this strategy point of view. I think then it should be clear. But if you have any questions, let me know. We drag the script, change the range bars once again to 2, click on OK. Click on Open Offline, go to Pound Yen and find M2. Click on Open. Go to the template. Already, there it is. So this looks bullish, that's good. Moving down at the moment, so any retracement that hits basically the 0 line here and turns up again and turns green would be a long. Now the news event, of course, could stop a trader from taking a trade definitely within 10 minutes of that news event, and at the minimum, and probably the minimum 10 minutes after it. But otherwise, I think that this is looking good for a potential long when the criteria are met. Exit rules, I use discretionary one. I'm not sure if Nenet has a specific rule-based strategy. On the Elite Currency website, you'll find a PDF document where you can read through it. Maybe Nenet has mentioned some particular exit method there actually. Could be good to check, but I personally just use discretionary ones. If, for instance, a fixed TP like a 221 target at 25 or 30 pips, typically versus a 15 risk, or put a fib on the swing high, swing low, and look for a -1,000 target, for instance. Either the very first swing high, swing low here of the trend and aim for -1,000, or even move up the fib to the next swing high, swing low and look again for the -618 or -1,000. Björn says that maybe the 4 range is used actually. I'm double checking right now. Four pip bars, you're right. So this is what I've been showing is a bit faster. Alrighty. So in that case, let me try something again. Let me change this one quickly to 4. Oh wow, Pound Yen is really pushing up. And breaking very fast at the moment. That relative strength indicator sometimes useful to get an idea about which ones are kind of pushing the most. Okay, something went wrong here, clearly. one more attempt here quickly. Okay, that looks good. Now we can apply the template. And these are 4 bars. So in that case, price would need to dip back. The oscillator would need to dip back to the 0 line here, and then turn green again. For the moment, this push basically has to ride out, has to just finish, and then look for the pullback. Yep, thank you, Björn. Good point. But if you maybe like faster, setups or faster charts, then 2 could be an option. But 4 is actually the one that is mentioned in the document. Thank you, Caitlin. Definitely, I'll take a look. Cool. Well, I thank everyone so much. We're going to have a webinar tonight with Nenad again on Heikinashi, by the way, Caitlin. So maybe if you're interested in Heikinashi, that could be also something interesting for you tomorrow. We'll take a look at momentum indicators, Nenad and I, both at 5 p.m. UK time. And next week we'll have the same schedule again. So I hope to see you in one of these webinars again. And great, Caitlin. Good to hear that. Thank you so much to everyone, and good trading, and talk to you soon. Cheers.